Will Trump's second wave of tariffs cause a market capitulation or send it upwards? There are clues the market is giving right now, and we are going to dissect all of that, along with why and where the buyers are emerging on our stock market. We've also handpicked 10 ASX stocks that stand out from the pack, and we'll show you why they are special and could provide amazing runs up over the next couple of months. This is one you do not want to miss. Plus, we'll get into the tech sector's recent crash and what you need to know to spot the opportunity moving forward. Welcome to Wealth Within's Australian stock market show. With 20 years of experience training over 30,000 traders, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me are Wealth Within's professional traders, Janine Cox and Pedro Banales. Good evening, how are we?
Fantastic.
Good
yourself?
evening. Yeah, very good. I mean, we've got a lot to get to today. Trump Liberation Day on the way.
Coming up.
Tariff 2.0, tech crash, it's all happening here tonight. So let's get straight into it. Liberation Day, as we mentioned, is what they are calling it, a second bout of tariffs to come into effect in a few days. Now, Pedro, I want to get your thoughts on this because obviously, I mean, you're our fundamental expert around here.
Yeah, seem to be.
But I mean, you know, the second bout is coming, and the real questions investors want to know now is, you know, how is that going to play into our market moving forward?
Yeah, well, it's going to affect America first. Basically, the industrial plants, they're going to suffer. The tariffs not only affect one way going into America, but you've got manufacturing works both ways. There's many items that go in to America, then back out and then back in. So there's going to be multiple tariffs on a particular item. Now, the way that all this plays out is anyone's guess, but we do know that it's inflationary in the short term. So watch out for that. If inflation picks up in America, we'll soon find out whether inflation picks up in Australia. So if inflation does pick up, it could mean interest rates aren't going to fall for a period of time, which could benefit, you know, sectors like the bank. And we have seen that sector actually have a nice rebound recently. So that's pretty much my take on it.
Good points. All right, now we're going to get into that. That's a good point you raised about the banking sector. That is one sector that is doing some really good things right now. But I want to get into whether we do think we are going to see the same market reactions as the first bout of tariffs, because, you know, this is the interesting point. When the first bout of tariffs were talked about came in, obviously we've seen our market in correction territory now, down over 10%. Signs of life. But is this the, I guess, what is it? The straw that breaks the camel's back or something?
Oh, that's a good one, isn't it?
Is that how it's said? But is this what's going to send the market down another leg, or have buyers basically already priced in the second bout and potentially buying opportunity now?
Look, I think what's interesting is the sentiment that's out there at the moment and that uncertainty. And whenever there's uncertainty, it always creates the potential for more downside. So I believe that our financials are the ones that you were talking about and Pedro was mentioning. They're the ones that we watch first, and they were ticking up a bit. But that's always a good sign. However, because of the fact that there are so many experts and so-called experts out there suggesting that it could go either way, I think that creates that heightened uncertainty that can then allow the AI and the tech to really cause another flush out on our market. I'm hoping that's not the case. I mean, we've seen some really important levels being hit by certain stocks, and we could rebound from those levels. So I think that if we are near a bottom, we're not far from it.
Yeah, good point. All right, now I want to get more into the upswing the market has had recently, as Janine mentioned. Where is this coming from, and is it sustainable? Now, we spoke just now about financials, and let's focus on that, because obviously energy is another one that is starting to show some signs of life. But I mean, if we say financials and materials then start to pick up, they're the two combinations that means our market really is not going to fall.
Yeah, exactly.
So with that said, is it purely just financials where we're seeing the major turn right now?
For now, it seems to be. And I mean, we saw the financials be sold off quite heavily. It was a little bit of an overreaction, to be honest, a couple of weeks ago. And I think we saw actually the PE ratios come back to a nice level as well, nice dividend yields. So I think maybe people were starting to realize that, you know, there's good value in these types of stocks. But as you mentioned, we need to see the materials at the same time. Year to date, the materials are negative 0.93%.
I was going to say 93.
93, yeah, that might be a scary number. And the financials are negative 3.7%. So we really need to see the materials in the green and the financials in the green to really drive our market up.
Yeah, all right. Well, how about we get into the chart of the financials now just to have a closer look, because we are actually seeing buys come into the market. That is a positive thing. We spoke on this desk last week about the fact that the market was potentially bottoming, and it was some of the more, I guess, defensive sectors that were driving the move a couple of weeks ago.
Yep.
Now it's the big boys, it's financials. So, you know, that being said, does that chart look like, you know, this is the turning point?
Well, what we found interesting was that the market as a whole, from this low point here, so we've got this, if I can just zoom in on the weekly chart here, the low point that we had in March of, you know, in the financial sectors is around that $8,000 mark. It was only up around 2.5%. But the financials are up at the moment 4.37%. So it's a sector that has rebounded the most. And we actually had a look at all the other sectors, and none of them are up to this extent. So that is actually quite promising.
Did you want to add something to that?
Yeah, look, I mean, financials has always been one of my favourites, and it's safe money, it's the defensive money coming back into it. Like, there's a flight to gold at the moment, and gold's running on. There's always a flight to the financials. Unless there's some financial crisis coming into it, they tend to just pull back a bit and then take off again. But we've already seen them in sort of correction territory, and you know, at least one of them, NAB, had come back quite significantly.
Yeah.
Westpac had some good news out, as we said in a previous show. If you missed that, you need to go back and have a look for that previous show where we talked about the banks. That's actually looking like it's supported really well. So I think that this could be the lead as to a potential for recovery.
All right. Now, on that point, if this is the lead, now I know we're going to get into 10 stocks that you guys have handpicked to show that if we are in the recovery, and even on that point, even though the market is falling, there are stocks out there that are performing. We've spoken about this before. These 10 that you are picking, why are they so special? And do they have the opportunity to really take things forward in the next couple of months? Yeah, well, I mean, a few of these actually haven't fallen by quite as much as the market has. And even as the market was falling, these stocks were actually being held up. And they are showing signs of life, technically more so than fundamentally. But you can really find some opportunities if you just focus on the chart and see where the opportunities are there. Cut out all the noise, what's happening in the market, and really you can just filter through all the stocks, just look at them visually and see which ones have held up and which ones are actually trending up. So that's how we've basically picked them. Okay, so it makes sense, the contrarian approach. The ones that are performing in light of a capitulation, they stand out like... yeah, like lights on a... Like lights on a reindeer. They were like the green lights on a reindeer. That was going to be a completely different comment. But anyway, let's get to that then. What's our first stock? Perfect.
Well, we've got Coles first. Coles is not always a favourite, given that it's not typically a growth stock, but it had a good run. Money poured into this stock. We've seen that same sort of thinking in global markets as well, with a flight to safety, staple stocks getting support. Woolworths may come up, and we talked about that on a previous show as well. It was one of our trending topics. Yep. Make sure you check that out if you haven't seen that yet. But you can see that Coles has gone through that prior consolidation and looks like it's just finding some support there. It's halfway on the monthly bar at this point in time, around a $20 mark. We know that when stocks get to $10, $20, often we can see reversals at those levels. So this is not out of the ordinary to see that sort of move happen. If we look at the shorter term, we saw a big rebound a couple of weeks ago where it just reversed and clawed back most of what it actually lost, which is great to see for Coles. But at the moment, it's just in a sideways move. And like Pedro said, it's actually proven itself that it's more resilient in times where they're selling off. Like you see more risk off in the areas of tech and in the areas of even some energy stocks are getting sold off. But this area is probably going to be more, less risky, I'd say, and particularly if you're looking for stocks that have been sold off more recently as well, like Woolies. Yeah, and is that, now to take it off, before we get into the next stocks, we've got a few good ones coming. Is that a blanket approach both of you take as traders when you're looking
to identify the players that, are doing something different? Is it just as simple for all our viewers to look for stocks that are performing in light of corrections, or is there a little more to that than?
Yeah, well, I mean, you just get your watch list and have a look through the charts. That's the biggest eye-opener that you'll see. If you're not looking at the charts and you're only looking at fundamentals, you're only getting part of the story, and the direction is always the key thing. So it's definitely about looking at those stocks that are holding up now, because the money shifts from one sector of the market to another at times, and we particularly noticed that in July when big funds move. So I think at the moment the smart money is just holding with the stocks that are more resilient.
Yeah, it shows. I mean, the recovery is almost back to near the all-time high.
Exactly.
Yep.
Next one.
Next one, we have ANZ. So this is another one that, it's a bank that really didn't take too much of a hit when we had that bank run, as I would call it. We had this fall back in December, but basically the whole market fell then. And then we had this more recent fall here in February where all the banks were down. Now, if we were just to put a little price percentage there, it fell to the correction type territory, around that 10%. But it's actually held up very nicely around that $28. And this is what I really like about this, that $28 has been a springboard for multiple price movements in the past. As long as it holds up above there, for me, this is an accumulation type pattern, and we're ready for the next run soon enough. Plus, they've got their Suncorp acquisition all done. That's finally.
Yeah, that's a big one, isn't it?
Yeah, it's not. There's no uncertainty around that, so the market can move on.
Fantastic.
Right, so it's held up well. Is there anything else you're looking for on this one right now? Because we're identifying stocks that are looking very promising.
Yep.
Is it, time to go with this just the way it looks right now, or are you looking for a little bit more confirmation with price to say, okay, you know what, that next leg now is in for the upside, and we're likely to take out that previous high, which is around $33, $34?
Yeah, definitely. And I think that we covered this quite well on our Monday report, and you highlighted a very good level here, which was that downtrend. Potential down momentum line, that if it does break above that, and I totally agree, if it does break above that level, then we could be seeing a good opportunity. And the other level that we highlighted was the $30 level. So $30 seems to be a natural resistance. If it manages to break above both of those, that is looking very promising. And I think that it will do that.
Fantastic. All right, now I know we've got some gold plays in there as well to watch later on, so keep your eyes peeled for that one. But we're not getting to gold just yet. What's next?
All right, we've got Fletcher Building. FBU is the code, and you can see it's been in a long decline. It's been sold off over time. But what's interesting is as the market's actually coming off, it's actually reversed strongly in February. So it's bucked the trend, and that's what's interesting here. But not just that, we're on a monthly chart. So you've got to put this in perspective, looking at these, this consolidation that's happening right near the low there on the monthly chart. We really like those sort of patterns when they unfold, and a bounce off that is confirmation of support from the buyers at the bottom. The sellers are potentially finished. And now we're just looking shorter term to see whether this can hold. And you can see this accumulation and this big sideways move, and that's really a good basing pattern to have. But at the moment, it hasn't actually proven that it's on the way yet. It's only just begun. And so it's about being patient with it and waiting for a break through that, approximately somewhere near that black line. I wouldn't be too cute about where it's got to be, but you just want to see that direction, because for 1, 2, 3, 4, you've got about 6 or 7 weeks there where it's just tracked sideways and is locked around $3.
Interesting little pattern there, isn't it?
Isn't it? It's very nice, isn't it? But it hasn't finished forming yet. We're just waiting for that to complete itself. But when it does, then we'll have some really good opportunities there. But looking at the upside, there's some real resistance for the stock overhead at around $4. Interesting that it's got stuck at 3, potentially 4, and we could have another one at 5.
I want to go to your comment just then quickly, because you mentioned interesting little pattern. Now, obviously, if you are a student or a client of ours, you would understand exactly what you're talking about. But if you are not, explain a little bit about why these kinds of patterns are so exciting in the market and interesting. And just knowing them, being educated on them, how they can really supersize your projection in terms of knowing with a high probability where the stocks are likely to get to.
These patterns are textbook, and anybody in Module 5 doing our course would know exactly what I mean. They form during uptrends. So they're basically continuations of the uptrend. Like Janine said, though, we're still yet to see it, formally form. But if we go to the chart, I'll zoom in, and this is a little pattern that I'm talking about here, and I'll highlight it with a, if I can find the rectangle. So it's what's forming around here. And basically price moves up, it goes sideways for a little bit and forms these peaks and troughs. And then on the breakout, we can determine whether the trend is continuing or not. And they form time and time again on stocks. If you know this, it can make you a lot of money.
Yeah, the trick is to know, because it can look easy what the guys are doing with their eyes, but there is a whole bunch of skills and tools behind all that. And to that point, if you want to get an intro to all of this stuff, have a look at Dale's book, Accelerate Your Wealth. I think you don't have to pay anything for the book, it's just the shipping, and it is a very good introduction to everything the team are doing here. Now, we've got that one out the way.
Yep.
Next stock.
More banks.
More banks, good.
Believe it or not.
Right up your alley.
All right, Westpac, which is the one I talked about earlier, where we had that flight of the who's who in the zoo in Goldman Sachs coming to Westpac to hold the share price up, and it's done a great job in doing that. The news was actually really positive for it. But it's not just that, it's more or less about the strength in this. And like you said before, when we're looking at patterns, we're seeing, well, this is something really interesting setting up. When we look at the way it's unfolded from the low, and then we're seeing another pullback now, it's all gearing up to head above that $40 mark at the moment. So it's just in the preparation. So people who have got this stock and you're holding on to it, I wouldn't be letting it go at this point right now, given it's pulled back. If you've still got it, if you of course you had different rules, then I'm not knocking you, of course, your strategy, because some people trade over different time frames and it has produced different exits along the way. And I'm not saying that there's no risk of it falling below this 14 March low. It could. There is a possibility of that. But right now, we've had 2 weeks up. We just need another couple of weeks up to come and test these prior highs up here, and then we'll get a real feel for what Westpac's going to do.
And I mean, just looking at that chart, big picture, it explains perfectly, or it shows perfectly, why it's so important to look at the financials. Because you look at the chart of Westpac, you overlay the chart of the Aussie index, 2020 to 2024, going sideways, doing nothing. The banks start running, the index starts going up. Yes, it is weighted heavily to the financials, but that is the lifeblood of economies, right?
Sure.
And when you look at that, I mean, you're listening to the news every day over the last couple of weeks, all red, negative, recession, the world's ending. But then you look at a chart like this, and it doesn't line up with what you're hearing. I mean, it looks like the banks are going to go for another run.
Well, yeah, I mean, when we think about the stocks that actually go sideways and when there's a bit of volatility and uncertainty in the market, it tends to be your Woolworths, your health stocks. Some of the banks tend to not be pushed to the downside as much unless you're in a major correction like a global financial crisis, which we're not in right now.
I'm just saying it can trick, the viewer out there into thinking, just watching the news, hey, I should be, being, I guess, negative about things, but look at the charts, because they're going to tell you possibly a very different scenario. Anyway, next stock.
Okay, next one, we have another bank. So, this really does highlight what we're talking about here, the financials, how they've, held up very nicely. Now, this is BOQ, Bank of Queensland. It's one of the second tier banks, so it's a little bit more volatile than the rest. It has been falling, if you were to think of it technically, it has been on a long-term decline since 2007, which is interesting because, it never really managed to recover full on from that GFC low. However, we're seeing a little bit of a different happening over here. So we've got from the COVID low, it trended up, then it trended back down, but didn't really quite retest that COVID low. It actually found support at $5, and now it's got a beautiful trend on the monthly. Yep. Sorry, you wanted to jump in?
I was going to, but I thought I'll let you roll with what you're doing.
Sure.
The only question I was going to ask, does this move look more sustainable than what was happening back during COVID? Like, would you be more confident with Bank of Queensland the way it's rising right now as opposed to the COVID era?
Well, the gradient of rise is definitely, how should I say, shallower, not so steep. But the rate of rise was actually pretty sustainable out of COVID. You could see a nice continuation pattern there and a few along the way. But now it does look like it is a little bit more sustainable, albeit not so fast moving as it was before. But
so when you say sustainable, you're looking at just those ups and downs that I'm seeing here, and thinking it's just tracking along nicely along that angle, isn't it?
Along that angle, exactly. It's not going full steam. It's not overbought or anything like that. It's just tracking along quite nicely. And again, this one is managing to hold up. We had the 4 there from February, but now it's getting bought back in. So I like it. Any move above $7, I'm happy with it.
Fantastic. All right.
Okay.
Next one.
Next one we've got is STO. Now, we've seen this one roll over with the energy stocks. They've pulled back into lows. Bit of a resurgence coming back in on Santos just more recently. It's trading up at the top of its monthly bar, but it's still got a long way to go. We're seeing it actually in a downtrend in this direction now, and it really needs to break up and prove itself. The challenge we've got with Santos, though, is just because of the nature of the way that it's unfolded. We can see that bar there of a couple of months ago confirmed the resistance and where it lines up. Every bar that you see on the chart, the more they tell you what's going to happen in future. So as we get more data on the right-hand side, it just builds that picture. And to that, I can see that level's really important now for it to get back above. So if it gets back above that bar of January 2025, I think that will be really good for Santos medium term.
If I can also jump in on that one, because, I can't help myself with energy. So with Santos, what I really like is that this $6 is a very strong support level, and it's actually bounced very nicely from it. We can see there on the monthly, the close, it actually got rejected from that area. And what has happened in the past when it actually springboarded off that? So we've got a 47% rise there. A little bit earlier, before then, we had a bit of a 25% rise. So, just by knowing that and knowing these previous levels, of course, you might not be able to find a rule exactly there, but you could actually make a nice, decent return. And how long have we got to go to that upper level? We've still got around that 20% to that $8.50 to $9, 30%.
It's just really odd, isn't it, to see a stock spend most of its time going sideways. How many years has it done it? Nearly 10?
So frustrating.
But at some point,
what goes
sideways must go up or down. And, just quickly before we get rid of or move on from Santos, testing both of you right now very quickly, what level makes you excited for Santos's future?
Well,
above what level?
I think this high here of 730, once it gets above that, then I would start to be interested in it. I'm not saying I'd be excited. I'll leave Pedro.
I'm already excited, to be honest. I'm trying not to jump off my chair right now. But look, I'm excited about this one, especially with the gas prospects.
Yep, fantastic. All right,
okay.
Next one.
Next. All right, we've got SGM. Now, Sims Metals, that's a really interesting stock. I mean, it's spent a lot of time falling over the history, but appears to be making some sort of a long-term low. I'd be watching this trough, which is way away. I'll just expand the chart up so that we can see it a bit closer, but you can just see the checkered history of this particular stock. It looks like it's actually made the long-term low with the pullback in COVID. It also made another one here in 2016. And then we're seeing the next one in 2024. So it's very rhythmic, and that's the thing that I like about it. We've got this test of that bottom with the pullback in December. That's what you want to see, ticking the boxes.
Yep.
It's already gone through there. I would just be saying that there's a bit of short-term resistance here. But if you've got a nice stop loss and you're willing to get into it and you're willing to allow a bit more movement in the share price and not set too tight a stop loss, then it could be okay.
Now, is this an opportunity, medium term, short term, long term? Because, looking at that chart, it is a stock that is trending, but I wouldn't say it's in a huge growth, expansionary type phase.
Yep.
It's just moving up and down, kind of range bound. Does that lend more to the short term, medium term trader, or are you thinking potentially, now that it's at these or relative lows in its life?
It could be the start of a run. We just don't know yet. It's just early stages. But you're right to be cautious about it because of the fact that it's spent a lot of its time over the past decade just trading at that range. However, I think with going to the weekly charts, really the key to this, and just watching what's going on. This is in a beautiful trend.
That's
right
lovely.
Now. It's had a nice orderly pullback. We're just seeing another one come into it. Unless it takes out this low in February 2025, I wouldn't be concerned about it right now. So I think it's looking good.
So your answer was traders market.
Traders market, but I'd say investors as well, mate, because if we look at the long-term projection of this stock, you can see that it runs for a certain amount of time, or it has done more recently. So I don't think it's going to stop doing that anytime soon. And so it could, if you're an investor with a short to medium term mindset, this could be something as well. It could come back up to test that level, and that would be 139 off the bottom, off the recent run here. Shorter, but still there's potential. So 50% to go back to that high.
Yeah.
Beautiful.
All right. So predominantly financials and energy so far. I mean, this is the theme that I'm getting.
Yep, and a bit of materials in there.
Which is very interesting to see on our market.
Yeah.
We do have more stocks. There's a gold
We do.
play coming.
There's a gold play, but for now, a bit of an outlier, Telstra. All right, we haven't talked about Telstra. It's been unloved for a while, but this is looking beautiful. Now, if there was ever, just say, and I'm going to say the R word here, recession, anywhere, you're still going to need your phones. People are still going to be needing to communicate. Telstra is a very important part of the ecosystem.
So you're saying defensive?
Defensive style, and that's what Janine was alluding to before as well, that the flight to safety is really evident at the moment.
Well, with Telstra in particular, is it that is what is causing this price appreciation, or just the fact that, hey, it's been so cheap for so long, at some point you're looking at this and thinking, okay, there's real value here. As you said, it's a big, strong company in obviously an area that recession-proof.
I don't know if I'd use cheap and Telstra in the same sentence.
They do have a dominance in certain areas of their field. And when you talk about other companies with dominance, like CSL, Cochlear, whatever, you look at their share prices, very different. Maybe this one's just been left behind.
Well, I mean, Optus uses their towers, I believe. All of them, they all use the towers. All the infrastructure belongs to Telstra.
Yeah.
From a fundamental look, that's fundamental. But from a technical look at that, you couldn't ask for a more beautiful pattern there.
Yeah, I think you really have to stay up to date with what's going on with Telstra, because the big end of town wanted the Telstra board to break the company up, and they did a restructuring. And that sort of supported the share price for a while, but I think the clause are still in there. They still want that to happen, but the CEO is not budging. She wants to get fair value for shareholders with the projects they have in place. So, but it should be a good stock going forward. It's just a question of when.
When, yep. Well, yeah, beautiful.
Well, let's answer that question.
Well,
is now the time?
Well, look, just quickly, we'll just outline some possible resistance up ahead, which is around that $4.30. But it is looking like it's going to test it. Now, worst case, I'm thinking something like this, that it will go up, test it, come back down, retest that momentum line, come back and retest it. And if it does break through it, then we're good to go.
All right, fantastic. Now,
all right, next one. This one's really interesting. I do want to add something if I can.
Yes.
On Telstra, or you want BPT the next one?
Whatever you were wanting to add something on.
Beach Petroleum is a stock that I know that you've liked over time, and we had discussions about this at some stage. You're telling me you don't remember?
Yeah, actually, yes. Now I remember.
Remember, it's got that right level of volatility that really makes it a good trading stock.
Absolutely.
So it's quick off the mark, and then you have to be quick, obviously, with your rules. So this one actually performed beautifully. I mean, just look at that consolidation that it's made and taken off again. It looks like it's doing the same thing.
Yep.
So I'd be really watching this one carefully. If it gets back above $1.50, it could take off and end up back in the same territory up here at $1.80, $1.90.
To refill that gap.
Yeah, it looks really good at the moment. So just the fact that it's gone up and had these two little cycles unfold, and then we're seeing a little bit of a slowdown, which is nothing serious. And, this is why this one's on the list, isn't it? Because it hasn't fallen away in light of the recent speculation and concern. But looking at it, you can get 1, 2, 3, you could get 6 weeks up, 4 weeks up, a few months up, and then you might be able to find a short-term exit to manage yourself out of that stock.
Yeah, it's a beautiful trading stock. And again, going back to those continuation patterns that we were talking about, that's exactly what's unfolding. Now, let's see how much upside. It
looks like it's changed personality, doesn't it?
It has. It looks more sustainable. It looks like more of a, longer term play. And we're still yet to find that out. But if it does get up to those levels, you've got 28% return, which is quite nice. These guys are in the gas space. I believe that they're in South Australia. Now, gas, again, there's a lot going on with that, a lot of demand for gas. So I think that the fundamentals are there. The chart is looking good. This one could very well be, a very good one to trade. Yeah.
Fantastic. Next one.
All right, we've got Newmont Corporation. Now, Newmont obviously was took over Newcrest Mining, so we've got a very scanty chart, if you like. There's not much data there to look at, but what it does do is it tells a story. We've had the gold price going on an absolute tear, and yet Newmont got sold off. The challenge for big miners is that they've got to keep accumulating other miners to get exposure to more ore, to get more gold deposits. Now, it's done that with Newcrest, but at the moment it's looking like it's holding up and is following the gold price again, which is good. So it's closing above there. I think that's as good as anything. If it got a weekly close above the top of that, it's got potential to keep going then. And you just need to check the upside to see whether there's sufficient upside in there. Probably about 12%. So that may, if you're not already in it, it may not be enough to justify going into it at this point, but it looks good. It could end up taking out that high and keep going.
Yep. Yeah, I agree. And this is a good scenario here where the stock came out and IPO'd in 2023, and it actually fell for 1 year. You could have actually picked it up at how much cheaper
rock bottom.
Rock bottom. So I can't actually see the percentage. I'll do it again from around here. You could have picked it up for 23% lower than it came out, and you would be in a nice profit there. Now, I do like the fact that it's traded above that high, like you've said. I think this one's looking good. It's a gold miner. So, keep an eye on this one.
At some point, that's going to translate into, particularly with these lower end, or I shouldn't say lower end, but with the producers, the results come after, once they're digging out. But anyway,
exactly.
One to watch. All right, next one.
Next one is SPR. Spartan Resources.
Another gold miner.
Yeah, this one looks good, doesn't it? This is one we looked at, I think, on the show was it a couple of months ago?
It was actually one of my hot stock tips.
It was, wasn't it?
Yes.
Yeah, and it actually had gapped up, and you were talking about the fact that it had broken through this level and was looking really nice, and it's continued to stay up, which is great. It's kept on going from where you mentioned, I think, but it's now just looking like it might come back into the range of last month's bar. Let's just squash that up a bit so you don't have to get your binoculars out. But there's always a potential that it could come back and fill this space here. In the short term, I think that this is a really good one, or even a long-term opportunity.
Yeah, I agree. Really like it.
You didn't want to pump that up anymore? I mean,
look, I pumped it up enough.
Hot stock tip.
It was. The guys can watch that episode. I think it was a couple of weeks back, so we did a deep analysis on it.
Yeah.
Welcome.
All right, fantastic. Now, if you want the skills to analyse stocks just like you have seen tonight, give the office a ring on 0392909999 or visit our website wealthwithin.com.au. Moving on, let's now get into our hot stock tip for the week, which is, Pedro?
Adriatic Metals, ticker code ADT. Now, I have to say from the get-go, I can't take credit for this one. This one was actually brought to my attention by one of the assessors, Kylie. So, Kylie, thank you very much. She showed me, we were talking about silver.
Yep.
And she said, I've got a great silver play. Check this one out. And when I looked at it, I said, oh, this one looks beautiful. I have to put it on. I asked her. She said, yeah, by all means. So, basically, on the left, we've got the monthly chart. On the right, we've got the weekly. And one very interesting thing that I wanted to highlight here is how cyclical this stock is and how predictable it is. And just by having the knowledge, this is something that we teach in the CFD and the Forex course. Of course, you have to do the share trading and investment course first, but then you can learn how to trade more short-term and learn about cycles. But, notice how this stock regularly has troughs around that 2-year mark. and it's just recently bottomed out in that 2-year cycle in August of last year. Now, it has gone up already from that rebound. It's already up 68%, but it's not unlike this stock to have these beautiful runs up. You know, we've got 300% from that low of that first cycle there. Then we've got how much from there? We've got 180 from that low there again. So if I was to, you know, project out, you know, what the potential is, it's anywhere between 180, say, to 300. Say if we be conservative and say, okay, 180, we could have a price target of around $7, which means that from the current level, you've still got another 66, you know, say 70% upside. It does look like it's in that phase where it is trending up. It's respecting this trend line beautifully, but if these cycles manage to stay on, then we don't expect it to test that trend line again until September 2026. So it's got a bit of fuel there still left.
Very interesting.
Yeah.
Look, I like this one as well. It's very interesting, but I was just thinking about, you know, who's going to trade it and what sort of strategy might be used to trade it well, because looking at the weekly chart, it just goes on an absolute tear for a couple of months, doesn't it? And then when it takes off. But when I was looking at your monthly chart, if we go back, and this is where a lot of traders don't think to look, we sort of really, you know, brainwash people into making sure they're checking the monthly chart, because most people don't do that, and that's where you can miss the really important, the gold that Pedro's just talked about, but also the fact that 1, 2, 3, 4, 5, 6, for 6 months you made most of your money in that first 6 months out of the low. Look at this one, 1, 2, 3, 4, 5, first 5 months, and this is the lower risk money to be made. The rest of it, it's just a bit more volatile. So here we've got 1, 2, 3. It only went up for 3 months this time and then pulled back. So this is a little bit different. So just watching now, it might mean that it's going to do what Pedro's talking about. If that bottom holds, that trough there holds, and it turns around and goes back through this high again, we could see it unfold and just end up being more like this potentially than what we've seen with these short bursts where most of the gains are made in the first 6 months.
Yeah,
great point.
Very interesting. Now, I just want to touch on, you know, you both said about looking at that monthly chart, and it's something, as you said, it gets skipped over a lot by new traders, by day traders, by short-term traders. But, you know, how do you know where you're going if you can't look at the whole, you know, the whole map? And that's what that monthly chart does. It allows you to see the big picture, irrespective of whether you're trading short-term, medium-term, long-term. Knowing the flow or the direction, you can apply any trading strategy over that. So is that something you both kind of, you know, are always looking at when you're trading? Because I know you both have slightly different trading methods. You're a bit more, I would say, shorter term, whereas more medium term. But both looking at the same set of data, irrespective, right?
Oh, absolutely.
Exactly, and that's the important teaching in this is you might miss the opportunity to trade it better over a different time frame if you just focused on the short term.
I would say the overarching rule is whatever time frame you're trading, always look at the higher time frame. Always, and that will get you out of trouble most of the time. You want to see, imagine you're an eagle, you know, looking at the landscape, you want to see what's ahead. And that's exactly what that higher time frame does. It provides that longer term aspect because you don't want to limit yourself to that kind of, you know, short term kind of a perspective.
Yeah, and it's not, I mean, it's not natural as, you know, when you're coming into the market, it's pushed down your face to say, hey, you know what? Go to the 1 minute chart or go trade such short term. But really, what can you see there? I mean, just apart from a whole
really, you're lambs to the slaughter doing it that way, basically. You're fodder for the big end of town.
All right, fantastic advice. Anyway, that is it for our weekly hot stock tip. Now, time to talk all things market trending this week. Janine, this is your segment, so...
And Phil, it's all about tech, and we love that space. Global tech stocks are crashing and data centre stocks are not immune. Microsoft has scrapped its data centre plans while Alibaba warns of a bubble in the data centre space.
That is some huge news because, I mean, you know, data centres were all the rage just 6, 12 months ago, a massive U-turn. And I mean, to me, the real question here is this fall a big opportunity? And what's the outlook for Australian stocks? And I'm going to go back to you on this one, Janine, because really at the end of the day, that's where it matters.
Yeah, exactly.
Are we in a tech bubble? Has it already burst with the way it's fallen? In light of this news, are there still opportunities in this space?
Great questions. And I think we have to really look at what's happening in the US, because obviously we're not immune. The talk about a bubble drives me nuts, because they talk about bubbles, but the stock prices have already plunged. Now, is it a bubble about that, or is it something else? Well, the article actually gave us a bit of a clue, because it's talking about the spend of these data centres and how much money they're putting into expansion. And you can see here on the chart on the screen there, the Australian Data Centre Investable Universe. This is Australia, which is showing New South Wales and Victoria as having the lion's share of the whole piece of the pie there, but there's projecting it to double to 40 billion. In the US, it's something like 500 billion was forecast to be spent over 4 years. So while Australia has a much smaller exposure to this, it's still significant from the point of view of the growth forecast out to 2028, as you can see. So Phil, looking at what's happening in the US, we've seen Apple, Meta, all the major tech stocks falling to around 20%, some 20 to 30%. We've seen Tesla fall 55%. Australian tech stocks have not been immune. We've seen some big stocks, plunge in our marketplace. But this is really a call for opportunity right now. I mean, a 20% fall on a tech stock, it's not necessarily over, is it?
It's a normal business, as per usual.
It's just, let's get back to business. So hopefully that happens and then they turn around and go back up. That's what we're looking at. But either way, if they don't, this is a space that you have to be watching and keeping an eye on. And we're going to look at some stocks shortly and share them with you. Other than that, Phil, I think that it's just a matter of talking about data centres and what they're doing. So we've seen so much in the AI space that's changing the landscape, and will they need to expand at the rate that they're doing it? DeepSeek came out. So this whole thing has sort of turned things upside down and put big question marks in that AI space. And data centres are right into the AI spend, as well as not just the infrastructure, it's the whole
hardware
picture.
behind it, yeah. And it's an ever-evolving thing with AI. Obviously, as you said, you've got to keep your eye on it. It's constantly evolving. New technologies are coming through, new competitors are coming through around the world. But the article did mention a few stocks, and Australian stocks at that. So let's go and take a good look at these stocks, because as you said, right now, in light of fear, sometimes the best opportunities arise.
Well, that's where you've got to keep your eye posted, don't you?
All right, let's do it.
Okay. All right, so NextDC is the first one. This one's the one that's fallen the most. So NextDC is a technology company and Asia's data as service provider. Companies involved in development and operation of independent data centres in Australia and Asia Pacific. So this is the big one. Like in Australia, this is the big one. It's fallen nearly 40%. This is close to where we're expecting. Notice there's a small gap just down here in March 2023. Now, when I saw the gap there, I thought, really, is this thing going to come all the way back there? We've got strong support across these tops here. Surely it's just going to come back to that zone and find support, but no, it's gone further. And that actually, if you're not holding it, you can clap your hands together with joy, because I know that sounds really sad, doesn't it, to be clapping your hands together when some people are losing money. But if you're not holding the stock, you can get in it at a much lower price. This is where the opportunity's coming up.
Yeah, and I mean, if you were holding the stock, obviously, looking at that chart, and again, it proves the importance of why you do need to be looking at price action, irrespective of whether you're a fundamentalist, whether you're a long-term.
It proves why you need to have good rules to exit at an opportune time. Now, you could trade this on a monthly chart or a weekly time frame, and it has rules that you can apply regardless, but just looking at where it's falling to now, Phil, it's heading close to that $10 mark, and I don't see it going much beyond that. I think that's where we're going to find a bottom. Yeah,
to me, it's more just about accepting the fact that, hey, prices of stocks, regardless of what they've done in the past, they go up and they go down. And sometimes you do see stuff like this, Often the best performing sector or industry or stock will at some point become, overstretched.
Yep.
And, throw on top what is happening now with the tech sector. That is why, being that active, knowing your exit rules, as you said, are so important. So, I mean, I can see 3 or 4 exits already on NextDC. If you are holding it, you've got to be asking yourself, well, you've had opportunity to get out.
And look, and just have a look. So obviously if it's fallen that far, you have to work so much harder to make that back, but it's got to the high, it's got a potential of 64% to go back up again.
For sure.
It's nice.
I'll just highlight something quickly on the monthly chart. For me, it's easy. Just follow this.
The angle of the trend.
Just follow this angle of the trend right here. It's just coming back to that angle.
Yep.
So I agree, around that $10, very good value for this one. I think that we could see a nice rebound off there.
Nice. All right. There's another one.
All right, we've got GMG. Now, it hasn't fallen as far, but you've got to think about GMG. It's a bit more diversified. GMG Group is a global industrial property digital infrastructure specialist group with operations in key consumer markets across Australia, New Zealand, Asia, Europe, the United Kingdom and the Americas. I got these off NextDC, not NextDC, Market Index. Got to spit the words out there, Janine. I'm getting tongue-tied. Okay, so you can see here, I think I'm just so excited about these falls. I just can't get the words out. 30% decline here to around $28, and that's a really nice level. We can see that the prior rise that was happening, just this short-term one coming up here, looks like it's heading right back to the angle of that trend. We've got that prior peak over here on the left. So when you're looking at stocks, always look for prior levels of resistance. They'll often come back to that and find support on those levels. But this is not all that you have to add to the chart. There's a whole lot of things to confirm the turn, which we can't do just yet because it's not in, but we perhaps can talk about that later on. But I'm liking this one. Any opportunity to get in GMG when it turns around and goes back up would be a good one. Pedro, did you want to talk longer term on that? Or do you want me to keep going?
Yeah, sure. Well, actually, I actually do like GMG
so
as well.
Have a breather.
Yeah, you can have a bit of a break. I'll give you a break.
I just lost my breath.
I'm sure that we're looking at the same things. So we've got this gradient of rise there that, we're not really expecting it to come back to. But, we do have this other gradient, around there. But in saying that, I don't think that it's going to quite come back down to that $25 level. As you highlighted, we do have that previous support there. So if we do see it trail sideways for a while, we could see it find some support around that intersection point there. But I think that it's actually going to find some support around that $26 mark. And GMG is a great company. It's one of our top 20. I'm not sure if it would be at the moment, actually, with this grade of 4. But it's a quality company and they've got assets. You're buying a company that has actual assets that are
I think people got to appreciate that this is where you're seeing the next big opportunities that could make a lot of money. So don't worry about the stocks that have already been going up and are still going up. Look for the ones that are falling like these ones. And like Pedro said, the good quality ones. There's still so much more spending that they're going to put into this. There's so much more investment to come. So let's have a look at another one, shall we, Phil?
Yes, please.
All right, DGT, okay, Digico Infrastructure REIT. You can see here, this is the other one in the article that they were talking about that's been sold off. Digico Infrastructure REIT is a diversified owner, operator and developer of data centres with a global portfolio and broad investment mandate across stabilised value add and development opportunities. So bit of a mouthful there, but essentially a data centre operator. And it's a REIT, which is important to bear in mind. So we're looking at this sideways move that happened once it first ventured into the market, and then since then it spent its whole time falling. And I think that, it sort of talks to what Pedro was mentioning about the declines in some of these stocks and how, it's fallen 40%.
When they list.
Just to clarify, you're both not saying, you should be looking to buy these stocks just the way they're falling, because right now they're in free fall. There's a whole bunch of skill that needs to be added to this picture in terms of identifying that the stock has confirmed that it's going to reverse, which we've not seen any of that on these 3 stocks just yet. So although there might be an opportunity on the horizon, like I look at that last one and I think, well, I wouldn't touch it. I want to see a lot more in terms of a turnaround.
Yeah, they're all pointing down.
Is that what we're thinking? Or?
Yeah, I think if the whole sector, what we've seen is this is a sector-wide thing. So when you see that sector-wide sell-off, often when there's a rebound, most of the stocks in that sector are going to get some benefit from that and see a rebound. It's just a question of degree then and looking at the upside. But to your point, there's not enough history to know with a high level of accuracy as to where the stock might run to. It's more a short-term trading opportunity than, say, a GMG or next DC.
Yeah.
I would also add that we need to start looking at data centers as a resource, as a commodity, basically. When there's an oversupply, these guys are going to suffer. When there's not much demand for it, AI is going to be the main driver of that demand. But what's spooking the market at the moment is that DeepSeek managed to do what ChatGPT does with like a tenth of the cost.
Yeah.
So that's why these overreactions are happening. But once the AI comes back and becomes more powerful and the demand is there, these resources are going to get eaten up.
Fantastic stuff.
I don't know about you. You're not going to go back through all your emails and your everything that you've stored in the cloud and delete it all, are you?
You wouldn't want to see those.
But if people started doing that, then they wouldn't need so much data, would they?
Of course, yeah. I think so.
Well, I mean, it stores more than just emails. Pedro's dirty laundry. But anyway, moving on. Let's now jump into more stocks and answer your questions. Ben writes, I'm after your professional opinion on NXG. Are we seeing what could be the start of a turnaround? I would like to get in for the short term, but holding off at the moment to see more confirmation. Is this the right direction to go in? All right, now, Pedro, I'm going to go to you on this one. Potentially some bottom picking going on here.
Yeah, huge bottom picking.
Why so serious?
I'm concerned for him because this is not the time to really start thinking about buying something that's of this nature. Maybe start to put it on your watch list and put your analysis. But have a look at this chart because I think that we need to highlight, first of all, what we were saying before about the big picture. This stock on the monthly chart, it's closing on its low. It's broken below this support level there, and it's actually broken below heavy support, which was previous resistance as well. It's on the way down. Further to that, on the weekly, again, you've got this little secondary move to the upside and then continuation of that primary move down. We're seeing it time and time again. So I'll just, highlight it in the sense that, it's just going up, down, up a little bit and then down. This is not really the time to be looking for an entry on this downtrend. It's a downtrend. Yep. It's basically a downtrend. Don't look for stocks in a downtrend. We did have a bit of a reversal. Look for something like this.
Well, to a point though, because remember, we've got to look for stocks. If they're in a downtrend, at some point that trend is going to end. So it's having the tools and rules to know when that's the case, right? So, I mean, when you were looking at the energy stocks, you didn't mind saying that you were excited about them when they kept falling.
Yes.
But now you've got a different story on this stock. And I'm thinking, I'm really wanting to understand why.
You want to look what's under the hood, right? So, look, in saying that, let's be fair and let's look at the other scenario. What would be a strong support level? And I'm actually surprised that you would like a stock like this, Janine. You're changing. I don't know who you are anymore. But I understand what you're talking about, that, it is coming into some strong support. Yeah. We do have high volume, though. Is that high volume on the up bar or on the down bar? It's on that down bar. And then we're seeing volume trickle off as the stock was moving up. So, I wouldn't be bottom picking this one. Other stocks like Santos and big stocks like that could be fine, but this one will turn against you on a dime.
A little more confirmation is basically what I think Pedro is getting at. But anyway, great email. Thank you. Next up is Carol, who writes, I am interested in the repeatable pattern of falls and rises I am seeing on Nine Entertainment on the monthly chart. It falls around 60%, then rises over 200%. I am expecting that the stock may find some support at $1.40 on the weekly chart, so would wait for a weekly or monthly entry. I am noting that there is a lot of strong resistance at the $2.25 level. All right, Janine, Carol with NEC, some repeatable patterns going up and down.
She's absolutely nailed it, Carol. Well done in picking these levels. I'm liking what you're seeing here. In terms of the potential for upside, look, I think you're right. It's quite a volatile stock, so I'd say You're a bit of a cowgirl trader potentially, but good on you. And I can see here exactly what you're saying. It looks like it's unfolding in a really normal way, but the upside potential is what gets me, just looking at the speed of it. So I'd be saying to you, have a really good plan for how you're going to capture that if it does turn around and get in without taking on too much risk. So it's a question of where would you do that? And I mean, there's one point here as one potential. If it gets back through that level, that could be a signal that it's on its way. But right now, I think this is one to watch.
Is 225 a concern? She mentioned 225 as resistance.
Not if you're thinking that you're going to get out around that level.
Okay. Well, do you want to explain that a little bit more?
So potentially, look, yeah, definitely. So if we're looking at how this stock might run, we can see that the angle of the trend so far is this. Now, often when stocks do this a number of times and they bounce on the angle of the trend, eventually they're going to start to accelerate away. So it could do that. But I wouldn't be trying to fight the stock to try to get it higher, I guess is the question. I'd be preparing and thinking, okay, I'm happy to take the safe part of the money. That's what we teach you to do, is take a safe piece of the run, which to me, this sort of zone is a safer piece of the run if it gets back up there and starts moving up again. So, but I wouldn't be trying to hold it beyond that point. If it starts pulling back and you're seeing exit signals unfold, a good training thing on this type of stock, I would say Trading Mentor is a really good start for a stock like this. It's got, all the things about support and resistance and a simple set of rules.
Now, that's a course that we offer.
I can see it all there in that chart.
Yeah, the Trading Mentor, just to confirm what Janine said, is a course that we offer at Wealth Within. So go on the website and have a look at that. But we do have another email coming in, which is Jules regarding APA. He says, I back tested the stock last week and my strategy prompted an entry on the open of the March the 10th, which was a few weeks before I managed to do the back testing. Do I enter now given the rules were triggered back on March 10th, or am I too late to the party given it has already run up 25% from the low? I feel that I should wait for that low to be retested given it is coming off a long-term bear run. Now, Janine, you smiled about that one, so I'm going to go back to you on this. Sorry, Pedro.
I was just chuckling because we had this on the show recently.
Yes.
And we gave commentary. So I think it was it not last week's, the week before?
Might have been.
Potentially. Yeah. Go back and have a look because we did talk about that and there were some little juicy bits there and I can't remember everything that we said for you. However, looking at it now, I think that, it's an opportune time. If you were contemplating getting in this stock, from a more medium-term point of view, it's probably triggered a decent rule to get in on the monthly chart. But on the weekly chart, it's probably, if you're looking short-term, you can see it's already run quite a way from that low. And we're at around, around $8 at the moment. So if it pulls back and takes out these lows, I'd just watch for that. If it does, then I just let it sit there and then wait for it to give you a low. So you were talking about waiting for a low to form and a retest potentially, which is wise. It's a really wise way of thinking about this, which is what some people don't do. They just try to get in while it's running and then not realising that it could potentially be at the top of its run, which is what it's showing is potentially the case at the moment with this turn down this week. But if that's just market sentiment and the negative talk about what's going on with Trump and it doesn't come down much and then it turns around and goes back up, it could end up being a really nice stock to trade.
Now, part of his question, which was, to me, the interesting part was I had it back tested a while back, a few weeks ago. I didn't take the entry. It's gone past my entry level. Should I just jump in?
Well, what I'm saying is it's a bit too late. Like if you're not in it, which is what the weekly chart's sort of showing.
Well, actually, Janine, I might have tricked you there because of April Fools.
Did you do a daily?
I've actually gone on the daily.
Is that why you're pointing and you're
saying? That's what I was pointing. Look. Because I did that on purpose because I wanted to highlight that opening, opening on the Monday, the March the 10th.
Thank you.
No worries.
So I let him up the garden path.
I was trying to warn you, but
look, too, if it does pull back below this low on the daily, I'd still be watching it. And it means that it's pulling back to form another low, doesn't it?
Yeah, I totally agree with what you're saying.
But if we can just go back to the weekly like you showed, I mean, how many times do you see a stock that's traded up 1, 2, 3, 4, 5, 6 weeks and it doesn't have a pullback? It's, it's normal for this sort of thing to unfold. It may not come back to 740, but in an ideal world, if it comes back to test off that prior high and then takes off again, that could be really nice. For me, if you were trading on trend lines and you're on a monthly chart, it looks like it's pretty close to a trigger there. I haven't got a trend line on there, but you'd have to check it.
All right, well, there you have it. Sounds like the opportunity could be still there for the longer term, but also that pullback might be just around the corner. But anyway, a great email, thank you. And remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, if you want to watch more hot stock picks from us, check out our Trump tariff beating stocks video.